Hello, everybody. Welcome to Thursday. The S&P 500 was down 0.2% today. Really kind of not a lot happening today in terms of the price movement. It kind of was up a little bit, ended up down a little bit. But the biggest thing that happened today really was that the Dow crossed 40,000 points briefly. Unfortunately, fell down below that and didn't close above 40,000, but that's coming shortly, I'm sure. The market is still going the right direction. I mean, if you look at what's happening, we've got earnings, from companies are upside surprises kind of consistently. That's really helping. The consumers has a few cracks here and there, but if you look at the overall picture, the employment situation is quite good. Unemployment's low. Wages are growing faster on average than the cost of these different, indexes like the CPI and the PCE and what have you too. So that's helping. And then we've got this situation where they might be lowering interest rates here at some point later on this year, which could really help things. That'll help businesses to grow a little faster, helps the consumer for consumer debt and those types of things. And maybe even mortgage rates would come down a little bit too, which could help the housing market. Housing market's been doing surprisingly well, even with mortgages in the 7% range, mainly because there's just not enough supply on the market for those people that do want to buy a house. So it's managing to keep the prices up. One of the things that's really interesting about this particular situation that we're in now is, the economy should have slowed down a lot more when they raised rates, by over 5% in a short period of time. But a lot of people are kind of insulated from some of that change because if you refinanced and you've got a 2 3/4 or 3.5% mortgage or whatever it was, you're able to, still pay that lower payment. It doesn't change even though they're raising rates unless you have a variable rate loan, you're locked in there. And of course, that's also helping the housing market indirectly because people don't want to move and give up that great rate and then end up with another mortgage at 7%. So it's kind of fascinating to see how this is working. And companies did the same thing. They refinanced their debt at very low rates during that, pandemic period. So they're not being affected unless they have to issue new debt or borrow more money. Really they're kind of locked in with those lower rates too. And so they're talking, the Fed Reserve has been talking about how this rate increase seems to be having less impact than they expected. Which maybe is a good thing because things are going pretty well. So anyway, we'll wait and see how things play out. Again, market's doing spectacular, just below all-time high. So it's fun to watch. So anyway, look forward to talking to you tomorrow. Thank you.